All right, good afternoon, everyone. This is Joe Bachell here at Chaikin Analytics, and I'd like to welcome you to our presentation today of how to profit from smarter option strategies. Presenting today is Marc Chaikin, founder and CEO of Chaikin Analytics, along with Tony Zhang, co-founder of OptionsPlay. As a reminder, this webinar is being recorded, and a copy will be sent to everyone who has registered. Please submit your questions using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. Now, Marc Chaikin created Chaikin Analytics to put the power of proven stock research tools in the hands of professional and individual investors. His Chaikin Power Gauge rating, a proven 20-factor model that uniquely combines fundamentals and technicals, is his latest contribution to the investment industry. Now, to get us started, here's Marc Chaikin.
Joe, thank you, and welcome, everybody. I'm very excited this afternoon to bring back Tony Zhang, who has presented to the Chaikin community 3 or 4 times, and our subscribers can't get enough of it. And we thought that this would be an appropriate time with the elections coming up to do another webinar with Tony. Let me start by introducing myself. For many of you, I'm known for the Chaikin Money Flow and Chaikin Oscillator. And by the way, if my voice is a little bit uneven, I've got a summer cold in October. It's 82 degrees here in Philadelphia, if you can believe that. So I've been on Wall Street for over 50 years and lived through 10 bear markets. We've seen headlines starting in February all the way through the Brexit fallout that we'd be going into a bear market. And I'm going to start out, once I make the introductions, by doing a little bit of market analysis. There's nothing that I see, in spite of this sideways range for the last 3 months, that suggests that we're heading into a bear market. But when I encountered the first bear market of my career in 1969-70, I realized that fundamental analysis was not enough. I had been with a very fine fundamental research firm called Shearson Hamel at their main office in New York at 14 Wall Street, and they basically inculcated us to follow the analysts. And I followed the analysts for 2.5 years, and every day was an uptick after the bear market of '66 ended. And then following the fundamental analysts in a bear market, which began in 1969, was no fun. My clients' accounts were decimated. My personal account was a train wreck, and I realized that there had to be something more that I could be doing to protect my client assets and grow them. And for me, that was technical analysis. I'm sure a lot of you have lived through that, having been so close to the tech bubble of 2000 and the housing bubble of 2008. But technical analysis for me has been my salvation, and it's enabled me to use fundamental analysis, but know that the technicals would protect me in bear markets. Along the way, I've been mentored by some of the smartest and most successful institutional investors. Some of them were colleagues and some of them were clients. But I learned from them. And what I learned was what they looked at to make investment decisions, because that's how I could be effective at helping them use technical analysis in their methodology. And everything I learned over a 40-year period is embodied in the Chaikin Power Gauge rating, which I created in 2010. It's the culmination of my life's work, because I had always dreamed of creating a model that would combine fundamentals with technicals and give the individual investor and trader an edge, a very similar edge to what I had created for my institutional clients. Chaikin Analytics is used by the pros, and fortunately, we've been quoted in the media, so Paulson Hedge Funds, Soros, and Fidelity are using it. But more importantly, people who cater to individual investors like Malden Economics and Simpler Trading and Tom Gentile's Money Calendar Alerts and Power Profit Trades have embraced Chaikin Analytics as a discipline that makes sense to them. And now I'd like to introduce Tony Zhang, who is the Chief Strategist for OptionsPlay and who has joined me on, as I said, many webinars in the past. So Tony, why don't you introduce yourself to the folks?
Thanks, Mark. Thanks, everyone, for attending. We're very excited to show you OptionsPlay this afternoon. Many of you have seen it that have used the uh, OptionsPlay widget within Chaikin Analytics. And what we're going to do is show you today how OptionsPlay makes options trading extremely easy for you guys. And a little background of how we started this company. We looked at the workflow of a typical options trader, whether you're a beginner or you're an expert. It started with the options chains, and the chains there's a lot of information on there, but no matter where you start, you're constantly looking at different expirations, different strikes to figure out which combination of options you want to use to leverage the view that you have on the underlying stock. And what we realized is that there's so many options there. A lot of times people were confused, let alone all the information you needed to decide which option you want to trade or which expiration you wanted to trade wasn't available on the chains, meaning you still had to take that information and put it into other calculators and things to figure out exactly what the different P&Ls and scenarios that you may have in your head. So what we did is we created OptionsPlay that was designed in a way so that you can quickly, instantly leverage any directional view on a particular stock, bullish, bearish, or even if you're looking for income plays, instantly once you launch the OptionsPlay widget. And it's a powerful combination when you combine the directional edge that you get from Chaikin Analytics with the ability to instantly leverage any specific view on an underlying stock using options. And that's what we're very excited to show you today.
Tony, thank you. OptionsPlay calls themselves options for the rest of us. And whether you're a novice to options trading, intermediate, or advanced, I promise you that OptionsPlay will help save you time and make you money. Now, I'd like you to take a moment to look back over the past 4 months, going all the way back to Brexit, when a two-day sell-off made it look like the world was coming to an end. And I'm sure you heard all the pundits on CNBC talking about 1,600 on the S&P 500, 1,700. And the fact is that that was a two-day sell-off, but it spooked people. And now we've got the election coming up and a potential Fed rate hike in December. And I can tell you from feedback that we're getting from our customer success team headed by Joe Bacella and our sales team headed by Dan Franz, that people are nervous. They're sitting on their hands. They're not doing anything right now to prepare for the election and what might happen to the market if Hillary Clinton wins and what might happen if Donald Trump wins. That's a big mistake. I address that in my weekly market letter. You've got to prepare and not let the headlines spook you or the anxiety that a lot of people are feeling, whatever side of the political spectrum they're on, that has them somewhat frozen. We had an example of that today. Healthcare stocks and biotechs have been beaten down because of the fear that Hillary Clinton will get in and that the government will be a lot tougher on drug pricing and on healthcare. The reality is that one company, United Health, which we're going to look at in a moment, which reported better than expected earnings this morning and raised their guidance, turned the whole healthcare sector around. And then you started seeing the rational people come out and say, well, Hillary Clinton's in favor of expanding Obamacare. She says there are things that need to be changed, but she's in favor of universal health care. So people drew the wrong conclusion if they think that the polls are indicating a Clinton victory, and they basically were on the wrong side of the healthcare sector, either out of it or short. And today's action in United Health and a lot of the other stocks like Anthem Health, United Health was up almost 7% today, approaching its all-time high. So you've got to really know what the parameters are. And I'd like to start out by analyzing the S&P 500 to give you a feel for where I see the market and where it might be heading into the election and post-election into year-end. So we have a one-year chart of the SPDR, the SPY, up on the screen. And the SPDR is the S&P 500 ETF, most actively traded instrument in the US markets on a dollar volume basis. So we had a W bottom in February. Many of you have seen me analyze that, but it's fairly clear that big declines, more than 10% over the last 40 years, almost invariably end in the shape of the letter W, whereas declines of under 10%, 5 to 10%, typically end in the form of the letter V, which is what we had here in June in the Brexit sell-off. So as we came out of that W bottom, Chaikin money flow, which many of you know, looks back over 21 days, measures institutional buying and selling, was strong all through that W bottom in January and February, and then coming out of it, it just skyrocketed. And what did that tell us? It told us that the institutions were buying the SPDR to get instant equity exposure. They buy the futures, they buy the SPDR. It's a way to get participation on the upside very, very quickly. And that persisted as we bumped up against the resistance at 2100, 2130. And then finally, in late June, we broke out above 2137 and very quickly went to the next resistance level of 2180, 2200. And money flow stayed strong until just recently. And with the impending election and the fact that the market has basically gone sideways since it peaked in late July, there's been some profit taking going on. As I said, people are spooked about the election. And up here we have our power bar, which measures the number of stocks with bullish potential based on our proprietary model, which we'll go through in depth in a moment. 71 bullish, 127 bearish. That's an oversold reading. And if you look down here on our overbought, oversold indicator, strictly based on price, that was oversold coming into today's rally as well. Now, something that has changed is that beginning in February, the average stock in the S&P started outperforming the large cap names, those FANG stocks that contributed to such a big portion of the gain in the S&P in 2015, Facebook, Amazon, Netflix, and Google. And again, today with Netflix surprising to the upside, and I have to tell you it surprised me, with the stock up 20%, didn't just surprise me, it surprised a lot of Wall Street, which was looking for a weak quarter. These large cap names are starting to outperform the smaller cap names. That's not inherently good for the market. You want to see participation, you want to see the average stock as measured by the RSP, which is the Guggenheim equal weighted S&P, outperforming the SPDR. So there's been a little bit of deterioration here. Money flow has been slightly negative for the last month. Percentage of stocks with bullish versus bearish power gauge ratings is negative, and the large cap stocks are starting to outperform the small cap stocks again. So I'm on alert, but I do believe that we're going to get a year-end rally and that money flow will pick up as we do. But the market is looking for an upside catalyst to get that breakout above 2200 that would give us a very decent year-end rally. Now, the small cap stocks have been leading the market higher. So here's the Russell 2000 ETF, the IWM, that many of you use to get exposure to small cap stocks. Now, the power bar has been bullish for over 6 months in the Russell. It's still bullish even when the large cap shows a negative power bar reading. 522 bullish stocks heading into today versus 347 bearish. And if you look at our relative strength indicator, which goes from red to green, beginning in mid-May, small caps started outperforming large caps, just as the smaller cap stocks in the S&P were outperforming the FANG stocks. So as long as that continues, and it was the case today that small caps gained on large caps, the market's in decent shape. I'm watching the market like a hawk here. Notice that the Russell 2000 ETF found support at our long-term trend line, whereas the S&P 500 has been below it. So in general, I'm bullish about the market heading into the election, heading into year-end. Not quite as bullish as I was 2 or 3 weeks ago when money flow was so strong. But whether you're bullish or bearish, Chaikin and OptionsPlay can help you profit from smarter option strategies. It's always important to have that overview. So let me give you the election overview before we get deeply into these intricacies of Chaikin Analytics and OptionsPlay. It's my view that if Hillary Clinton wins the election, it'll be business as usual. The market will stage a very significant post-election rally into year-end. But that if Donald Trump wins, there's an uncertainty surrounding his policies. He's never been in office before. He's claiming to be a change agent, and Wall Street hates uncertainty. So my sense is that if Donald Trump wins, there's going to be a bit of profit taking and a sell-off in the market. And you need to prepare for both these outcomes. So you prepare for a Clinton victory by making sure your portfolio has the best stocks based on the power gauge rating and that your options trades are well positioned post-election. If, on the other hand, Trump wins, you want to make sure that you're out of the very weak stocks that we're going to look at later in the presentation, because these are the ones that are going to continue lower if we get some selling after a Trump victory. So we're going to cover 5 different points: finding bulls and bears with Chaikin power gauge rating, which is our fundamental indicator, and relative strength; using Chaikin money flow in a very specific way to anticipate future price movements; going to show you how to improve your timing with buy and sell signals and quickly find the best option strategies using OptionsPlay; and then finally how to use earnings alerts in Chaikin and OptionsPlay ideas to supercharge your profits. One of the reasons that I like the partnership that we have with OptionsPlay is that we're both dedicated to solving the information overload problem. Information overload is the bane of our existence in the 21st century. Facebook, Google, Snapchat, LinkedIn, email, you name it, just too much going on in our daily lives. Twitter, if they survive. And then in the stock market and options particularly, all of this information, all these numbers to digest. So the key question to ask is right here in the middle of this slide: how do you focus in the age of distraction? Now, I've been using this slide for a while, and I was actually chuckling when Joe Bicella told me that one of our clients has taken a screenshot of this slide and put it up on his trading bulletin board, because it really is the key to making money. You've got to focus, filter out the noise from the talking heads on CNBC. Don't get distracted by the fear headlines. Have a plan and stick to it. There's a saying in Wall Street: plan your trade and trade your plan. And it's been around for 25 or 30 years, and it's as true today as it was back then. So our solution to the information overload problem is Chaikin Analytics, and we're going to show you a lot of examples of a very disciplined methodology that you can implement that includes the OptionsPlay integration. And we integrated OptionsPlay about a year ago because when I saw it initially, it was referred to me by a former colleague. I said, wow, this is the program I would build if I was going to build an options program. By the way, I ran an options department for 5 years back in the late 70s and early 80s. So Tony, you may want to jump in here and just give people a top-level view of what OptionsPlay does and why it does it so well.
Yeah, so, like I was saying at the beginning of the webinar, the premise of how we started this company was to simplify options and make it more accessible. And what we realized was that by looking at the chains, you couldn't get all the information you needed. And if you wanted something as simple as, a bullish strategy on Microsoft or a bearish strategy on Chipotle, how do you actually go about quickly finding the correct strike, the correct expiration, and being able to view all the analytics behind these strategies so that you can decide which strike or expiration you want to trade. And that's when we kind of really realized the limitations of the chains. So what we did is we built a platform that allowed you to compare strategies side by side, provide guidance using color-coded analytics so that you don't have to go through the typical analytics that you get from most options trading platforms, which can get quite hairy. Talk about information overload. There's no shortage of information on most options trading platforms. So what we really tried to do is condense all that down to just the stuff that you need to know in an easy to digest format, and color coding to help guide you and provide you the analytics you need so that you can very quickly understand which strategies are available to you, whether they fit your needs or not. And lastly, and I think more importantly actually, is not only finding you the correct strategy, but helping prevent bad trades. And that's what we'll show you in a little bit, is using this platform not only to find the strategies and leverage explosive options trades, but also help guide you. So especially if you're new or you're a beginner to options, making sure that you don't overstep your bounds or take more risk than you should be doing.
And I think Tony hits on a key point, and I want to stress this. A lot of people in the Chaikin community are new to options in the last 2, 3, or 4 years. What that means is you've never traded options in a bear market, because since March of 2009, we've been in a bull market. And when I do my one-on-ones, which we sometimes offer as a special bonus, I always ask the question, how long you've been trading options? Because if your only options experience is in a bull market, you've got a rude awakening when a bear market surfaces. So put writing strategies, which people are using to generate income, can be very hairy, to use an expression that Tony just alluded to, in a bear market. And option writing for protection and put purchases become much more important. But whatever the market climate, Chaikin Analytics leads to larger options profits because it gives you a directional edge. And we do that by combining fundamentals with technicals into a quantitative model that does the heavy lifting for you from a perspective of knowing which stocks are your best candidates for long trades, whether you're buying calls outright, doing buy rights, or buying vertical call spreads, and which are your best candidates for put trades. And then finally, we have buy and sell signals for better entries and exits. Now, I can tell you, based on 5 years of running an options department at a regional firm called Tucker Anthony and R.L. Day, which had over 250 brokers and thousands and thousands of options clients, that 95% of those clients lost money. And the primary reason they lost money, in my opinion, is they didn't understand how important a directional edge is in options trading. Now, it may seem like a truism that if you know where a stock's going, of course you can make money in options. It's not that simple because of time premium erosion and strike price alternatives. And that's where OptionsPlay comes in, because it's going to find you the highest probability trades. Now, I think you'd all agree we're in a volatile market. Last week was a case in point. We had a big sell-off when Alcoa reported, market stabilized. Then China reported some very bad export-import numbers. We dropped again on Thursday, and then Friday, the market rallied with the better earnings on the bank. So we're in a volatile market, and a volatile market demands a disciplined methodology. This pyramid encapsulates the Chaikin methodology. At the top is the Chaikin Power Gauge rating. It's our core piece of unique intellectual property. It's what distinguishes us from every other service or platform or charting package that you've ever seen, because it gives you an edge. In the professional world, this is called adding alpha. At the bottom of the pyramid, 2 technical indicators, Chaikin money flow and Chaikin relative strength, which work very well with the fundamentally based indicator, the Chaikin Power Gauge. Now, Chaikin money flow is on every one of your online brokerage platforms. It's on Reuters and Bloomberg. It's on stockcharts.com. I made it available to the general public back in the early 80s, and it's been used by both institutions and individual traders ever since. Chaikin relative strength is proprietary to our platform. You could get something similar by looking at William O'Neill's Investors Business Daily. The problem there is numbers from 1 to 99 indicating relative strength. Numbers just add to information overload in the same way that options chains add to information overload. So we've converted it as you'll see in a minute, to a red-green heat map. And then finally, those buy and sell signals, which are so important if you're trading options, whether you're swing trading, even writing covered calls. Timing helps. So the Chaikin power gauge rating itself is output as a very simple visual gauge that goes from very bearish to very bullish. It's a simple display, but it's a very powerful indicator. And I said many times on webinars like this that the Chaikin power gauge is like a Chevrolet with a Ferrari engine under the hood. And it can be your GPS during earnings season. Now, during earnings season, as we saw today with United Health, earnings surprise is a big driver of stock price movement. And here's an example of how our earnings surprise factor, one of the 20 factors that I'm going to show you on the next slide, within Chaikin Analytics, that can help you know whether a stock is likely to meet, beat, or disappoint Wall Street analysts. And here's a typical example. In August, before Urban Outfitters, which is based here in Philadelphia, so we follow that pretty closely, was due to report earnings. On Street.com, one of their analysts said, sell Urban Outfitters ahead of tomorrow's earnings report. Take profits, it's already run up. Now, our earnings surprise factor, which you can always see in our displays, was bullish, suggesting that Urban Outfitters would beat analyst estimates. And sure enough, when they reported earnings the next morning, Urban Outfitters surged after trouncing expectations for earnings and sales, and the stock jumped 11% pre-market. And using our intraday charting capability, you could see as the day progressed that the stock had gapped up on the opening on heavy volume and was making a new 52-week high. And at one point during the day, it was up almost 17%. So that's how the factors in the Chaikin power gauge rating, or any of the single factors individually, which you can screen for in our screener, can help you find the stocks that are likely to beat analyst estimates or disappoint on the downside. Now, here are the factors in the Chaikin power gauge rating that give me the confidence that I need to be in a webinar like this and tell you that the Chaikin power gauge can help you and give you that directional edge that you need, not just in earnings season, but through all your trading in the course of a year. 20 factors that reflect what I learned from institutional investors. The model works because it's based on how Wall Street works. Institutional investors look at factors like this every day before they make big investment decisions that affect stock prices in a meaningful way. Value investors like a Warren Buffett will look at the financial metrics, which are 35% of our model. Jim Cramer loves earnings. Now, surprisingly, one of the interesting and mundane factors that has an important role in investment success is earnings consistency. It's not the biggest numbers that always count, it's consistency of earnings growth year in and year out and projected into the future. But I've boxed the most volatile of the factors in the model, which is the earnings surprise factor, and also the one that can help you make the most money during earnings season. So a company has an earnings surprise when they beat or miss analyst estimates. And what I learned from my colleague George Douglas when I was at Drexel Burnham in the mid-'80s, had the best quantitative database on Wall Street, gave me access to it, was that earnings surprises come in bunches. As we'll see on the chart of United Health in a moment, there's never just one of them. And when companies report positive earnings surprises, you get highly volatile price action afterward, usually a big spike up. Sometimes that's a great spot to take a profit, or maybe the next day, and we're going to see a pattern of that on the United Health chart. But they also lead analysts to raise or lower their estimates. So you get a positive earnings surprise, and analysts will almost immediately start going back over their numbers And more often than not, they'll raise their estimates. They're a bit like sheep, and they tend to follow one another to the slaughter, so to speak. So earnings estimate revisions are the single biggest short-term driver of stock price movements. So here in this model, you've got a very eclectic mix. The financial metrics are the value bedrock of the model. But then we've got some very sensitive factors like earnings surprise and earnings estimate revisions. Throw in short interest and insider buying, and you've got what one independent analyst said was a very eclectic mix that finds a lot of different ways to like or dislike a stock. Now, one of our webinar partners, John Carter of Simpler Trading, and I know many of you know about John, he's one of the best pure traders in America and has been for 20 years, saw the Chaikin power gauge rating and analyzed it and said, this is an objective awesome meter for stock. There's a lot of hyped up tools there, but when I find something interesting, I'll let you know about it so you can imagine that a single tool that combines 20 plus technical and fundamental factors to anticipate a stock's profit potential got my attention. I call this an objective awesome meter for stocks. And that means a lot to us because John Carter has seen every tool in the books. He has his own technical tools, but yet he's embraced Chaikin power gauge rating as something that he and his traders are using. So let's look at a few performance numbers and then really show you how to use this. Combining back-tested and real-time results from 1999 through 2016, the average very bullish stock in the Russell 3000 has been up almost 20% a year for a 17-year period. And the average very bearish stock has been down 1%. And that's after a 7.5-year bull market. Now, in 2015, things got very interesting because in the Russell 3000, you've got small cap stocks, you had a lot of energy stocks, fracking stocks like Range Resources, Kinder Morgan, rails, cloud computing stocks, small caps in general. The average very bearish stock was down over 17% last year. In fact, over 50% of the stocks in the Russell were down more than 20% at some point in 2015. Power gauge rating spotted those stocks. Very bearish and bearish stocks were down. The very bullish stocks were down only 1%. Now, this is a cap-weighted index, so the average stock was down about 7.5%. But it's the ability to capture that spread between very bearish and very bullish performance that's at the heart of why Chaikin Analytics can help you make money in your options trading. Now, two other proof points. We have a partnership with Nasdaq. 2.5 years ago, we launched 3 co-branded Nasdaq Chaikin indexes. Large cap, small cap, and dividend achievers. All 3 of those indexes have outperformed their benchmarks over the 30 months they've been in existence. And there's an interesting requirement here. You've got to hold these stocks for a year because the index doesn't get rebalanced but once a year. So we applied the same Chaikin methodology, or a very similar one, to what we're talking about today, created buy and hold portfolios that were subsets of these large and small and dividend indexes, and they're outperforming the market. And the goal was that after these indexes had proven themselves, that ETF creators would license them as the basis for exchange-traded funds, and we hope to have a very positive announcement on that sometime in the fourth quarter. We also have a partnership with First Trust Portfolios out of Wheaton, Illinois, who create unit investment trusts sold through advisors to their clients. They launched the Chaikin Low Beta Growth Portfolio Unit Investment Trust in December 2014. There are 4 series out. They've launched one every quarter. There's about $50 million being managed in these equally weighted portfolios of 20 stocks. And here again, they have to sit in place for 15 months. Now, you may be wondering, well, why is this relevant to me as an options trader? And the answer is going to be very apparent when we look at our first 2 slides, the bullish and a bearish example. Stocks that are going to outperform the market over the next 6 to 12 months are also the ones that you want to be trading on the upside. If you're a swing trader or if you're using options to capture short-term price swings. Because you don't get to be a top performer over 12 months like Superman by leaping tall buildings in a single bound. You do it day by day, inch by inch, step by step. So the fact that these buy and hold portfolios are outperforming, and when you see some of the stocks that are in there and some of the stocks that can't get in there because of the rules, you'll understand why this is so powerful for options trading. Now, James O'Shaughnessy wrote 2 books that are right here behind me on my bookshelf that are called What Works on Wall Street and Invest Like the Best. And he said models beat humans because they reliably, consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions. And he's also a successful money manager. And that pretty much sums up why I think that the combination of the power gauge rating and options play is so important. So let's look at a very simple pattern to help you find winning stocks. We call it the classic Chaikin bull. Bullish power gauge rating. Performance relative to the market is strong, and Chaikin money flow is green, not red, indicating that institutions are accumulating the stock. Now, here's a 1-year chart of United Health, the largest healthcare provider in America. Beginning in February, this ribbon at the bottom of the chart, which goes from yellow to red to green, turned green, which meant that our power gauge rating was bullish. The stock had just broken out of a base, or was about to, at a price of about 118, 120. It was already outperforming the market. Our relative strength indicator is right above the power gauge. And the institutions were accumulating the stock. And the reason we know that is that the Chaikin money flow was red, not green. Now, not every charting package colors this because it fluctuates around a zero line. But this is visually the most compelling way to look at these 3 only indicators, 1 fundamental and 2 technical. Now, on this chart, every time earnings are reported, we color the icon EPS with a red, green, or gray color to indicate whether the company beat estimates or missed. United Health has beat analyst estimates for the last 6 quarters. Remember I said early on, earnings surprises come in bunches. And this happens to be one of the stocks that our rules-based computer methodology picked for each of the 3 first trust initial unit investment trusts. So positive earnings surprises persist. It's one of the 20 factors in the model. They lead analysts to raise or lower their estimates. And you want to be aware of signals that become before earnings are reported and then that first signal after earnings are reported, because that's usually a great entry point. So let's just look at this chart for a moment, because anybody who's long United Healthcare, and my wife is, she's on the road to visit her cousin in Nantucket. And she called me from the road and she said, you know, I own United Health and it's up 7% today. Can you look at the chart and tell me what it normally does after a positive earnings surprise? And look how easy it is. Back here in January, it spiked up on the day earnings were reported, went up 1 more day, and then went sideways for 13 days. So that second day was a great spot to take a profit. In April, exactly the same thing, but now the stock was up in uncharted waters, making new highs. So you spiked up the day earnings were reported. You went up the next morning as the public sort of got the message. And Wall Street brokerage firms were talking to their clients, spiked up, and yet again, a great opportunity to take some money off the table. And the stock went sideways to down for 3 weeks, gave you what we call an oversold buy signal. That first signal after an earnings report is usually a good one. And that signal normally lasts 5 to 10 trading days, so you know you're going to get a good, solid short-term swing trade. And then yet again in July, you spiked up on a positive earnings surprise, with a buy signal preceding it, just as it preceded this one. And then yet again, the next morning was the high, and now the stock went sideways for 4 weeks and actually corrected down to the lower volatility band. Now, if you look at this chart, which is updated through about 3 o'clock, what do you see? You see a spike up based on the report that's highlighted here at the top of the screen, because we tell you when a stock is going to report, and then when they report in real time, we show it on the screen. You see the stock spike up to the upper volatility band. So what I told my wife was, wait till the opening tomorrow and sell the stock. You'll probably get another 2 or 3% out of it, probably 2%. But patterns repeat on Wall Street, and it's easy to see that. Now, the power gauge had gone neutral in mid-August because of that reaction of investors to the potential Hillary Clinton victory, and it was unfounded because suddenly United Health is talking about much better earnings next year. We also have an earnings alert in the form of a red or green exclamation point. So we had an earnings alert coming into these earnings because of these earnings surprises and the fact that analysts were raising their estimates. And that's another clue that you want to position yourself on the long side heading into earnings. Now, I want you to notice what happened as United Health got oversold here ahead of the earnings report. Look at Chaikin money flow. It was green, not red, as it was on the previous oversold. We're going to go into this pattern in depth because it is a secret that we've been teaching institutional investors for over 30 years. When you get oversold and Chaikin money flow is green, doesn't reflect any selling pressure over the previous 21 days, that's a pretty good tip-off that the institutions are not contributing to the sell-off, they're actually taking advantage of it. Now, let's look at a classic Chaikin bear and then invite Tony Zhang in. Chipotle is a classic Chaikin bear. Power gauge rating bearish, underperforming the market. Chaikin money flow is weak, indicating that the institutions are selling the stock whenever they can, and the power gauge rating turned bearish at about 700 ahead of the E. coli crisis, which is circled on the chart, and ahead of a bearish earnings surprise. Power gauge rating has been bearish for over a year. Stocks dropped from 700 to below 400. And along the way, there were some wonderful opportunities to sell the stock. Now, just today, Raymond James, a big regional brokerage firm based in Florida, which ironically has integrated OptionsPlay into their advisor terminal, said sell Chipotle on permanent loss sales. They're having a tough time getting their customers back. So before Tony comes on, I just want to show you 2 options strategies that we talked about on previous webinars. Back in early June, we did a webinar and Chipotle was 453. And using OptionsPlay, we zeroed in on a vertical put spread, selling the 455 July put, expiry July 8th, my birthday, and buy the 420 put. And by the time July rolled around, Chipotle had traded down under 420. So you realized 173% gain. Just a month ago, in late September, we did a webinar like this, and Chipotle was 425 after a negative earnings report. And yet again, we zeroed in on a vertical put spread, the 427.5, 375 put spread. The stock traded at 389 today, and that put spread had widened out from $1,640 to over $3,500. So better than a 100% gain, and there's still time to go, because when you look at the Chipotle chart, you see that with the market up strongly in the morning, Chipotle was yet again down after a sell signal in Chaikin Analytics. In Wall Street, the strong get stronger and the weak get weaker. Now, Tony, do you want to jump in and work some magic with OptionsPlay on Chipotle?
Yeah, so let's see. I'm going to share my screen here. All right, can you see my screen now? I have Chipotle up.
Yep.
Great. So as Mark was saying, we're looking at Chipotle. This is a stock that we've revisited quite a few times now, and we're looking at it again. And what I want to show you is how you can easily leverage a bearish view on Chipotle, or bearish or bullish view as well, instantly using OptionsPlay. So as you can see, I have the Chaikin Analytics platform up on my screen, and there's a button here on the top called Options. And when you click on that, that will launch the OptionsPlay widget. Now, by default, what we're going to do is we're going to always take the view of the Chaikin power gauge. So in this particular case, because Chipotle Mexican Group has a very bearish power gauge rating, we're going to show you 3 bearish strategies by default. Now, as you can see here on the top of your screen, you have 3 choices. I'm bullish, I'm bearish, or income. So today we're going to look at, if I have a bearish view on Chipotle, how can I take advantage of OptionsPlay? Now, traditionally, if I had a bearish view on Chipotle, I'd bring up an options chain. I'd look at, what my time horizon is and choose the expiration that suits my time horizon. Then I'd think about what type of strategy do I want to do? Do I want to buy a put? Do I want to buy a put vertical? Or are there other strategies I want to explore? So today, what we do with OptionsPlay is we present to you 3 of the most popular strategies to take advantage of a bearish view on Chipotle. And what you get is you can short the stock. For those of you who have never traded options and have only traded stocks, that's really your only option if you're interested in a bearish view, is to short the stock. That obviously has certain requirements, margin requirements from your broker in order to do so. In the middle, what we have is a very simple option strategy, or buying a put. For those of you who are new to options trading, you've probably heard of calls and puts. This is the simplest of option strategies that you can do, and we're displaying that to you. And lastly, on the right, we have a put vertical, which is a spread. And for those of you who have some more experience trading, you're probably familiar with this strategy. It provides some additional benefits compared to just buying the put. And what we do is we present this to you in a way so that without having to pick an expiration or a strike or a strategy, you're already presented with 3 starting points that is viable for anyone who is a novice or an experienced options trader. And we put them side by side on a level playing field so that you can actually start comparing these 3 strategies and start taking a look at which one best suits you. And how we present this in a way is providing summary analytics as opposed to all the different analytics that you would typically get from an options trading platform, which traditionally may look something more like this. It breaks down things like cost of the trade, max reward, max risk, probability of profit for some of the more advanced trading platforms, break-even numbers, dates to expiration. Now, if you're looking at this, especially if you're new, this just becomes a wall of numbers, and it becomes very difficult to kind of compare these numbers, because how do you compare something with unlimited max risk with something with $2,200 of max risk? You can't really compare those 2 numbers. So what we do is we summarize all of these numbers in an easier to digest format called the OptionsPlay score. And this is designed to give you a better reading on what is the current probability-based risk reward on each strategy, and putting it on a level playing field so you can actually compare these side by side. And it gives you an idea as far as what the true risk reward of a certain strategy is, and not just looking at a strategy in its academic form, which is, for shorting the stock is unlimited risk, or buying a put has limited risk. We're actually looking at probability-based numbers to give you that OptionsPlay score to tell you which one gives you the best risk to reward. Now, additionally, once you have these starting points, you still need some more information to decide, based on my thoughts on this stock, which one best suits me. And that's where we leverage the P&L simulator. This is a very powerful simulator that's designed to give you what-if analysis in a very easy to understand format. And essentially what you have to do is simply say where you think the stock may go, whether you think that stock's going to go lower or higher. You can create any particular scenario that you have in your head for this particular stock, both on where you think the stock's going to go, as well as when you think that stock's going to hit that target price. And for those of you who are a bit more advanced, some volatility metrics to play around with if you're so inclined. But at the very basics of the P&L simulator is using the P&L simulator to simulate a directional view you have on this particular stock. So Chipotle is trading at 393 right now. So I can say what happens if this stock hits 375 on any specific date. So by default, we'll look at expiration date. So if you think the stock's going to go down to 375, as you can see, the strategy here on the right gives me an 8% return. I get about a 10% loss on buying the put and about a 4.5% return on shorting the stock. And it highlights for you in blue which strategy gives you the highest return. So you can start creating different scenarios in your head depending on where you think the stock's going to go. And it'll highlight for you exactly which strategy will give you the highest return. And this really starts allowing you to play around with the different scenarios. And that's kind of how we came up with the name OptionsPlay, because it really allows you to kind of create any scenario and play around with the different possibilities and see which strategy is actually best for you. And talking a little bit about earnings, especially if you're interested in playing Chipotle as an earnings play, this powerful tool allows you to simulate what happens right after earnings. So as we can see here, Chipotle reports on October 25th. So what we can do is we can say, what happens if Chipotle really takes a hit right after earnings? And we could say, what happens if Chipotle goes to, let's say, 370 the day after earnings, right? So it reports on the 25th. So let's take a look at what happens if Chipotle goes down to $370 2 days after earnings. And for those of you who are a bit more advanced, you might know that volatility tends to come down a little after earnings, and really simulate that scenario and say, if the stock goes down to 33.70 2 days after earnings, this strategy here on the right is going to give me the highest return. So now I can definitively say, if I'm looking for a bearish move on Chipotle on earnings, that this strategy here on the right is probably best suited for me. And you can create different scenarios. What happens if the stock really beats expectations, which is possible. And if the stock really beats expectations, what am I looking at? I'm looking at about $1,000 in losses on the spread, $1,300 loss on the put, and about $2,800 loss on shorting the stock. So this is why the options play score here on the right is actually the highest, because even if the stock goes in my favor, I make a higher return. And if the stock kind of goes against me, I actually lose a little less than all the other strategies. So without having to know all of that and calculate that and figure that out, the options play score already summarizes that for you. And that's really kind of the power of the options play score. And once you've honed in on a strategy that you'd like to trade, we provide different tools to help you better understand them. So there's a plain English tab for those of you who are new to options. I highly recommend you to take a look at this tab. It'll explain what you're looking at, what the strategy is, what the stock needs to do in order for this strategy to be profitable. So especially if you're new, take a look at that. And once you've kind of honed in on the trade that you want to place, you can always hit the trade button to get a bit more analytics before you go ahead and pull the trigger. One, it gives you the details so that if you want to enter it into your brokerage platform, it gives you the details of exactly what to enter. And we also provide what's called a strategy checklist. This is just the last step checklist to make sure that you understand the risks that you're taking and that you know where you kind of stand on each strategy. So in this particular case, you're trading with the trend of the stock, you're trading with the trend in the market, you have a high options play score. And it's letting you know that there's earnings between now and expiration, which is something that we actually see a lot of times when you're new. It's easy to overlook that earnings date. So it's making you aware, hey, is there earnings between now and expiration? And lastly, spread and liquidity, which is a big factor when you're trading options, is how big that spread is. Not something you're too concerned about when you're trading stocks, but when you're trading options, that spread can eat away into your profits. So it's good to understand, how much risk you're taking there. As you can see, there's a relatively wide spread here on this particular trade. So it's making you aware of that and giving you some guidance as to where you should place your order somewhere around the mid price to minimize the impact of that spread. So that's just a quick overview of how you can use this platform to very quickly find a bullish or bearish view on a particular stock, and without having to ever have to look at the chains to find a starting point for whether you're bullish, bearish, or income trades on a particular stock. And we're going to cover some of that in a little bit.
Thank you, Tony. And one thing I'd like to add, which is really about timing, which is so critical, we're at a point as we do this webinar this afternoon where Chipotle is oversold. That's not normally where I'd put on a bearish position in a stock that's dropped from 700 to 390. But notice in May, and then again in July, yet again in August, and then just recently here in late September, Chipotle was overbought. If you put on a spread like that when Chipotle is overbought, you're going to realize that profit very quickly and really have something powerful on your hands. So, Joe, I'm not seeing my PowerPoint. So I'm going to go to share screen and see if I can find my, I'm viewing Tony's screen, but I'm not, well, let me see what I get when I go on my desktop. And I will just go in here. Somehow the PDF disappeared on me. So we're going to go back to the PDF, and there we go. Sorry about that. So you can find bullish and bearish stocks in Chaikin in our hot lists. We have power gauge hot lists in addition to signals and indicator hot lists and factor movers. You can see all the bullish or bearish stocks, stocks that have turned bullish or bearish recently, stocks that are very bullish or very bearish. So we do a lot of the heavy lifting for you. Now, 3 patterns that we've identified that help you pull together all of this intellectual property and find winning trades. The first one we call the dynamic duo. It's the combination of the power gauge rating and relative strength, and it really does help you find big winners. So here's an example where the dynamic duo was strong. And what that means is the power gauge rating was bullish, which turned bullish in late October of 15 and stayed bullish till the end of July, and the stock is outperforming the market, which it did for that whole period. And in that period, the stock went from about 130 up to 170. And remember, that was a period when the market was having trouble getting going on the upside. And each time the stock made a new high, just like we saw with United Health after a good earnings report, it spikes up until this last earnings report in late July, when the stock spiked up to a new all-time high, and Chaikin money flow stayed red, not green, the exact opposite of what we just saw with United Health. Now, that's one of those rare opportunities on Wall Street where you have a chance to sell a stock at its high and really believe that you're not leaving a lot on the table, because that pattern has worked over and over and over again. Now, Huntington Ingalls, HII, reports on November 3rd, we have a bearish earnings alert. There's your red exclamation point. That means that analysts are lowering their estimates and lowering their ratings. And the power gauge briefly turned bearish. So here's a chance to have gotten out of the stock above 170, traded all the way down to 160 with the market making new highs. The stock was basically under pressure. Now, on the downside, SunEdison is the poster child for the dynamic duo. SunEdison was the darling of the solar energy industry, lots of brokerage firms recommending it, including Merrill Lynch up in the high 20s. Power gauge turned bearish in mid-July. Money flow was already negative, similar to HII. It was negative at the top, telling you the institutions were selling under cover of strength. And then it started underperforming the market. At that point, the dynamic duo was weak on the downside, and you can see what happened. The stock sold off from 28 all the way down to 3 back in January, when Merrill Lynch finally put out a sell recommendation, throwing in the towel just 3 months ahead of the company filing bankruptcy. So you can see the power of this dynamic duo approach, the market agreeing with the model. No matter how good your fundamental analysis is, no matter how good your model or the guru that you're following, if the market doesn't agree with you, at best it's dead money, and at worst it's a disaster in the making. So we were at a conference, an Options Industry Council conference in Southern California back in May, and an advisor came up to our booth just as I was demoing the system to another advisor, and I used SunEdison as an example. He said, well, wait a minute, can we go back to that? And he was an advisor with Merrill Lynch here in Philadelphia, as it turned out. And he said, I bought Sun Edison at 15 on the way down because my firm, Merrill Lynch, was still recommending it. If I had been using Chaikin, I would have saved myself and my clients a lot of money in pain. And that's what this is all about, putting the odds in your favor and avoiding disasters. Now, another way to do that is to spot personality changes. I believe it's the key to making and keeping profits. And we define a personality change as a stock that's been outperforming the market. So the relative strength indicator is green. That begins underperforming. And typically this is very smooth. It doesn't jump around a lot, so you can depend on it. Now here's an example of a stock with a bullish personality change. Qualcomm was completely mismanaged all through 2015. Company even admitted it. They didn't even know what they were spending on R&D and what the return on investment was. Now Wall Street put a big hurt on the stock as it traded down under 45 from 75. But then the company started turning things around. You can see the institutions buying it as it broke out from this downtrend. Chaikin money flow was green, but the power gauge was still bearish. Back in May, the stock started outperforming the market. It was trading in the 53 range. And then the power gauge turned bullish. So now you have the market agreeing with the model. And you got a positive earnings surprise back in July that spiked the stock up. And after some sideways movement, you got a relative strength buy signal, which comes when the stock is outperforming the market, trades under its 21-day average, and then moves back above it. So it's already reversed, but these signals tend to last 4 to 8 weeks, and they're perfect for swing trading. So a relative strength buy in a stock where the dynamic duo is strong, market agrees with the model, and money flow is strong, is a wonderful swing trading opportunity. Could have bought this stock at 62.5 on the way to 70. And if Apple's going to do well, and we're going to look at Apple in a minute, then Qualcomm's going to do well because they're still providing chips for the iPhone. Now, here's a stock that had a bearish personality change, and this is why it's so important to recognize these. Starbucks is a name we all know, and it was outperforming the market until February of 16 when it started underperforming the market. The stock was trading in the 58 area. 8 months later, the stock is trading at 53, having made a new 52-week low last week. Power gauge rating was bearish. You have that bearish personality change. You have to be able to recognize these in order to make and keep profits. The biggest mistake that people make as traders and investors is they fall in love with a stock and they put their feet in cement. And you cannot make money on Wall Street if your feet are in cement. You have to let the market tell you what to do. That's why relative strength is so important. It's the first technical indicator I researched back in 1967. And it works today as well as it did 40 years ago, especially when you combine it with the power gauge rating, which is your fundamental heavy lifter. So we have another pattern we call stealth buying and selling, because institutions and smart, informed investors can't execute their trades all in one day. So we have this pattern called stealth accumulation. It happens when a stock is going sideways to down for an extended period of time, which we define as 3 to 5 weeks, and Chaikin money flow is green, indicating that there wasn't a lot of selling pressure. So here's Quad Graphics, one of those small cap stocks that have been outperforming the market until just recently. And you had stealth accumulation and a couple of oversold buy signals. These are new 8-day lows in a stock with a bullish power gauge rating. And all of these 6 pairs of buy and sell signals are described on our website, whether you're a subscriber or a visitor, they're there. And we describe the construction of these signals so that you can be confident that these are right for you. So when you get an oversold buy in a stock with stealth accumulation, what do? Well, you buy a call option, you put on a put vertical, you position yourself in a swing trade for an upside move. And you had the dynamic duo strong, so everything was going for you. It's what Warren Buffett likes to call the fat pitch. Power gauge bullish, meaning the fundamentals are strong, outperforming the market, stealth accumulation by informed buyers, and then a buy signal. It doesn't get any better than that. The stock was trading at about 12.25 on its way to 29. And we've got a way for you to find these stocks. My wife Sandy gave a webinar on June 22nd to the John Carter organization, right at Brexit. She used this quad graphics screener output to buy quad at 21.53 on the way to 28. So it's really easy using the screener to find winning candidates. There were 3 stocks on this list that she bought: NACO, Nucor, and Quad, and AHGP, and they all have done very well subsequent to this screen in June. Now, here's an example of stealth distribution. McDonald's is a stock that the power gauge doesn't like, turned bearish in May, started underperforming the market. There's your dynamic duo. But just as with HII, when McDonald's, which had been outperforming the market with a neutral power gauge rating and terrific money flow, so this was a momentum stock, having moved from 90 to 130, that was based on people feeling that the company had turned themselves around. Now, McDonald's reports earnings this Friday before the opening. We don't have a bearish earnings alert, so I can't with any confidence telling you that they're going to disappoint, but the price action is certainly disappointing. But more importantly, as the stock made a new high after a nice 2-week run when earnings were reported back in April, look what happened to Chaikin money flow. It stayed red as you made a new high. Sell the stock, let someone else worry about the next 5 points. Take your money off the table. Now, shortly thereafter, the power gauge turned bearish at around 125. It started underperforming the market, and then it went into a period of decline after another disappointing earnings report with negative guidance back in July. And you've had stealth distribution going on for the last 2 months. Power gauge is still bearish, and Chaikin money flow has stayed red even when the stock rallied up. This stock made a new 52-week low today, with the market making new highs. The food retailing group, the restaurant group, is weak. Panera Bread, Chipotle, McDonald's. But back in May and June, if you still like fast food, when you were selling McDonald's between 125 and 130, you could have bought Jack in the Box. Stealth accumulation, positive money flow. Power gauge was bullish. You had a bullish personality change, and then you had a positive earnings surprise, a big gap up, sideways movement for 8 days. You don't have to buy the gap. In fact, you want to sell into that gap most of the time, and then buy that first signal, in this case, an oversold buy signal on an 8-day low right at the 21-day average after that earnings report. You would have been buying the stock at 75 on this sideways movement, or at 80 on the way to 102. So the question you have to ask yourself is, if you're confronted with 2 choices, do you want to hold McDonald's or sell it between 125 and 130? Or do you want to buy Jack in the Box in the same industry? Gives you exposure to both hamburgers and Mexican food, and then see another positive earnings surprise. Now, the power gauge has turned neutral because of the valuation, which is pretty rich now for Jack in the Box. But even in a period where the restaurant stocks, and we saw Chipotle and McDonald's both down today, earlier today, Jack in the Box was up 2.5%, heading back up toward that 102 level. So the relative strength, positive earnings surprises are propelling Jack in the Box. They're due to report on November 15th. We've got a bullish earnings flag with that green exclamation point. That's the difference between following a disciplined methodology and investing on emotions. Now we have 6 pairs of buy and sell signals in Chaikin. We have a dashboard alert that tells you what signals have triggered on any given day in any list, ETF, industry group that you're following. And here's an example of trading on the signals. Varian Medical, very strong medical products group, has given a series of buy signals, including one just 3 days ago, ahead of an earnings report on Wednesday, October 6th. Now, you can see what happened on the previous earnings report. The stock either spiked up before or after the earnings reports, but the key is buying these oversold buy signals, pulling the trigger because you believed in a disciplined methodology, has proven profitable, just as it proved profitable if you bought it 4 days ago, because the stock is trending back up toward 100. Now, Tony's going to talk about covered call writing, and I wanted to just preface that by saying that when you write a covered call, you're capping your upside. The assumption is you own the stock, then you write the covered call, and your maximum profit is the strike price plus the premium you receive versus what you paid for it. Now, excuse me. Just to preface Tony's remarks, we've been using Owens Corning in the building products group, which had a bullish power gauge rating all through the spring and summer, as an example of how you can combine options play and Chaikin. Now, we had a series of momentum breakouts, and beginning in May, the stock sort of pulled back and went sideways, actually in March, after a momentum breakout. So you don't want to buy the breakout, you want to buy the sideways movement, and then wait till the stock rallies to the upper volatility band to sell your covered call. It's a great way to combine the fundamental power of the power gauge rating and the predictive power with the technicals that are embedded into Chaikin analytics. So you get the ability, as we showed in a previous webinar, of selling at the money calls or slightly in the money calls at the upper band because they give you a lot more premium, knowing that the stock could get called away, but you're making a big profit because you do it after it's moved up. But in both these instances, back in April and then again in June, these options expired worthless, and you've had the ability to write 3 or 4 sets of covered calls on Owens Corning. In this case, April and May, and then again in July and August, adding tremendously to the income in the stock. Now, Tony, I know you have some interesting things to show people on the new income functionality within OptionsPlay, so why don't you have at it?
Okay, thanks, Mark. All right, you guys should be able to see my screen now.
We can.
Okay, so I just wanted to backtrack just a little bit and talk, just talking through kind of the bullish strategies real quick. I have Microsoft here on my screen, and I just wanted to highlight this today because this was one that came across my workflow today. I was looking at Microsoft. It's got a bullish power gauge rating. It's got positive Chaikin money flow. Got good relative strength compared to the overall market, and we're currently in this oversold environment, which does make particularly interesting timing for a long entry here. So one of the things that I did was I clicked on the options widget, and again, without having to have to go through the options chain and go through figuring out what expiration, what strike I want to trade, it immediately presents 3 strategies to me to allow me to very quickly zone in on which strategy of these 3 I want to trade. Microsoft also reporting earning on Thursday, allowing me to either look for an earnings play, based on if I think the stock's going to head higher on the day after earnings, or also allowing me to play more longer term. Technology is a very strong sector these days. There's a good chance that Microsoft may beat earnings on their new cloud business, and maybe this is more of a longer term play. This really allows me to leverage both plays, looking at what happens to the stock jumps right after earnings and what happens if the stock really continues to rally past 50, 58, the 60 level here on Microsoft. So using this platform, you'll be able to very quickly identify those trades. But one of the things I want to point out is that we're analyzing thousands of stocks here, and in reality, even though there are 4,500 stocks that you can trade options on, a good portion of them are not very liquid. And may not be suitable especially for a beginner when you're trading options. And when you're looking at a chain, when you're just looking at the prices using a chain, sometimes it's not very apparent whether that option is a good trade for you or not. So one of the things I want to highlight is, and I'm picking a kind of a random symbol here, Frontier Communications got a very bearish power gauge rating, but when I pull up OptionsPlay, I get a slightly different message than what we've seen before. I don't even have a vertical spread here on the right, meaning OptionsPlay could not find me a vertical spread that made sense. So immediately, if there's no verticals that make sense, it will tell you that, as opposed to trying to show you something that isn't worth trading. And you'll also notice here in the middle, when I'm buying a put, I get a very low OptionsPlay score. And there's quite a few reasons for it. One of it is because this option's not very liquid. It's trading at a very wide spread. But by just looking at the options chains, that's not always apparent. So that's one of the things I want to point out is you may come across a stock that, based on everything else, looks bearish. The bearish power gauge rating, negative money flow, weak relative strength. Everything matches up, and if you have a bearish view on this particular stock, you may come across and say, hey, you know what, maybe the options is just not the way to play this. Maybe you want to short the stock, or maybe you just want to walk away. And that's really one of the more powerful uses of OptionsPlay, is not necessarily helping you find the right trades to make, but more importantly, avoiding the bad ones and letting you know when it's not the right time to trade that option. So once we have that, we'll jump right into income. So the income strategy is a very interesting play here, because in this current environment, low interest rate environment, there's very little yield, right? Everyone's looking for different ways to generate yield, and cover calls is one of the great ways to increase the yield on your portfolio. At the same time, it lowers the overall volatility of your portfolio. But trying to find the right cover call to trade is, again, an extremely time-consuming exercise when you're using the chains. You have to pull up the chains, pick an expiration, pick a strike, then calculate what the returns are and the probabilities before you can say, well, let me look at a different one and compare the two. So what we do is we take a whole different approach to cover calls. First of all, one of the things is cover calls is not a one-size-fits-all strategy. Each one of you have different preferences on time frame, meaning some of you are active traders, some of you are long-term investors. You don't want to take the same approach to cover calls. And some of you are maybe very aggressive when you're cover calls, and you like to sell at the money calls to get as much premium as possible. And others are very conservative because you don't want to lose your stock. So one of the things that you do when you click on the income tab with OptionsPlay is there's a button here on the bottom called default strategies. Now, before you look at any income strategy on OptionsPlay using the Chaikin Analytics tool, you should use this default strategy to kind of set your personal preferences. So I have my preferences for short calls set to short term because I'm a fairly active trader. I look at the markets every day. I want to trade relatively short-term options. And for me, I like to take a more balanced approach when it comes to risk tolerance. I'm neither, an aggressive risk taker or a very conservative trader. I'm somewhere in the middle. So my settings for cover calls is short-term optimal. You kind of have to ask yourself a little bit kind of where you fall into those in these buckets and set these defaults in here, because what it will do is it will make your life a lot easier when it comes to finding cover calls. And for those of you who short puts or sell puts as a way to possibly acquire stock, you can also set those parameters separately. So for me, when I'm shorting puts, I like to be short term, but I like to be really aggressive, and I want to capture as much yield as possible. Many times I do want to own the stock, so I tend to get quite aggressive when I'm selling puts. Now, once I've set these settings, now you no longer need to go through the chains every single time on every single symbol that you want to write a cover call on. All you have to do is you can set up a watch list, or you can use any of the watch lists that are already set for you on the Chaikin Analytics screen, and you can literally just create click on a symbol and very quickly see, is there a cover call or short put opportunity in this particular stock based on my personal preferences. So as you can see on MU, I get a green bar with the green check mark. That's telling me that we were able to find a short-term optimal cover call that suits my personal preferences on MU. At the same time, I was also able to find a short put opportunity. And you can literally just click on a symbol and very quickly see, is there an opportunity for me? If there's a green check mark, that means we found an optimal cover call. It provides all the analytics as we do on the trading and income side to give you an idea as far as what you're currently, what your annualized return on the cover call is. And as you can see, Qualcomm currently pays about a 3.2% dividend yield. And by doing this cover call, I have an annualized return of about 9.4%, which almost triples my yield that I would just get from owning Qualcomm. But by writing cover calls, if I'm able to do this strategy consistently month after month, I'm going to raise that yield from about 3% to about 12%. So that's where it becomes a very compelling way for you to generate income using these cover calls. And you can do this instantly by just clicking on the symbol and seeing if OptionsPlay was able to find you an optimal cover call or short put. And you can do this down a watch list. You can create your own, and you'll sometimes come across perhaps a symbol where you don't find an optimal cover call. I'm going to see if I can find one here. These are all pretty big names here. Let's see. It's taking a second here. So looks like I'm able to find some pretty good income opportunities on pretty much all the stocks that I'm looking at. But when you come across a stock that there's no optimal income strategy on based on your personal preferences, what you'll get is a blue bar with a red warning sign. It'll be very obvious to you that it's not the same message that you typically get with this green bar and a green check mark. It will explain to you in exact detail what we're not able to find, and if we're able to find you an alternative, we'll explain to you what the alternative cover call we're able to find you. But what this does is it saves you a lot of time from having to go through the chains each time you want to write a cover call, calculate those returns manually, and then decide whether it's suitable for you. This automatically does that for you once you create your default settings here on the bottom.
Tony, that's great. And I know we're talking to OptionsPlay about somehow tagging these symbols in these lists so you don't even have to loop through them. You'll just see where there's a good options opportunity, and that's something that may be coming down the road. So I'm going to go back to the presentation, see if we can wrap it up so that people can go back to their daily lives. And yet again, Joe, I'm not getting the screen share that I'm looking for. So,
Hey, Mark, go ahead and pull up your PDF right now. Reopen it just like you had done last time.
Yeah, I can't. Okay, I can't get off this screen. Here it is.
And then once that's up.
Okay, we're back. So we got a testimonial from Jim Davidson who.
Make sure to hold on, Mark. Make sure we're not viewing your screen yet.
Okay. Joe, how are we doing?
Just go ahead and click on share screen.
I'm not seeing that.
Bear with me for just a second.
Okay, there we go.
There you go. Very good.
That seems to disappear on us. We'll have to get that right. So Jim Davidson had been speculating, and then he saw the light, and he's been writing covered calls and enjoying that 16% return. And he said, a better night's sleep and impressive returns and doing what the system tells me to do. And this is really powerful. So 2 final sections to the webinar: playing good defense, avoid stocks, reduce risk, avoid weak industry groups, know what stocks not to buy. So 2 stocks that you didn't want to own in 2016, Campbell Soup, very conservative company, Power gauge rating was bearish, underperforming the market. And then right before earnings, we got an ideal put setup with a sell signal, a money flow sell, bearish earnings surprise, and the stock keeps making new lows. And that's very profitable in a low volatility stock. And then potash, where the power gauge rating has been bearish for well over a year, the stock has dropped from 40 all the way down to 14. Power gauge rating has stayed bearish the whole time, negative relative strength, ample opportunities to put on put spreads, and clearly a stock you wanted to avoid. They report a week from Thursday with a bearish earnings alert, and the expectation is bearish earnings surprise, which would push the stock down to new lows. Now, earnings season is right here and upon us. We're in the thick of it. And you can make outsized profits during earnings season because volatility creates opportunity. Now, a lot of people shy away from earnings season because they're spooked by volatility. We view it as an opportunity. There's a lot of speculation in the media around earnings. Who's going to beat? Who's going to miss? And if you use the power gauge rating, most of the time you'll be on the right side of these earnings reports. So here's an example of PVH, which reports in December. We've already seen their earnings previous quarter. But in March, Street.com said PVH closed down ahead of tomorrow's earnings. And then an hour later, Jim Cramer said exercise caution with PVH ahead of earnings. Now, this isn't a knock on Jim Cramer. He's been referencing Chaikin money flow on Mad Money now for over 8 months, over a year actually. But what happened was that PVH reported better than expected earnings and spiked up 7% pre-market. So you can beat the experts who were warning you away from Urban Outfitters we saw earlier in PVH. And here's what the chart looked like. This first yellow arrow is where PVH was ahead of that earnings report. Look at the Chaikin money flow and the power gauge and the relative strength, all bullish heading into what turned out to be a very positive earnings surprise. In fact, PVH has reported 8 straight quarters of positive earnings surprises. It's one of the only apparel stocks that's doing well. If you look at Nike, Under Armour, Lululemon, all doing poorly. PVH, which makes Calvin Klein jeans, and Tommy Hilfiger, among others, doing quite well. Hanes Brands is doing badly. Why are they doing well? Positive earnings surprises. And the stock typically spikes up. Now, you've got an earnings report coming on December 7th. We've got a bullish earnings alert. I made this my bullish stock of the week in Market Insights this week, saying to buy it on dips because it was overbought. And here's an example of how you can make money during earnings season using the power gauge and our earnings alerts as your guide. Now, Priceline is another stock that reports in November 7th. Bullish earnings alert. It's the premier stock in the online travel business. Expedia and TripAdvisor are not doing well. It's got a series of positive earnings surprises. It's oversold coming into today. You want to position yourself to be long ahead of that November 7th earnings report because Priceline is very volatile heading into earnings. Now, here's another stock we recommended about a month ago as our bullish stock of the week. Morgan Stanley reports earnings before the opening tomorrow. I'm sorry you can't do anything to benefit from that. But Goldman Sachs reported better than expected earnings today, very similar companies. If we had been on a webinar on Monday, one of our earnings webinars, you would have been alerted to Morgan Stanley as a potential buy ahead of tomorrow's earnings report. We have a bullish earnings alert. It was up 1.5% today. This is this combination of information that pulls everything together. And now we've got news on the platform, so you don't have to leave the platform to get anything with your brokerage platform execution. Now, Apple is another stock where the rating has just turned bullish. You had a positive earnings surprise in July. You spiked up with a relative strength breakout in September. You don't want to buy those breakouts. You want to wait for that sideways pullback. You got it. 8 days sideways, and then the stock popped and went to a new high. And you've got earnings coming out next Tuesday. We don't have a bullish earnings alert in that. And there were questions today about what would drive a positive earnings report. But the power gauge just turned bullish. Stock's outperforming the market, making a new high. This one's a toss-up in my view. And Tony, I know we were going to talk about Apple, but since we're time challenged, I'm going to skip through that, knowing that there is a good options play, bullish play on Apple. And sorry to steal your thunder, but I do want to get people on their way. Now, we had a new client, Mark W., who gave us this testimonial in May. I had a 90% average return on my first 6 earnings trades using OptionsPlay and the earnings features. All very simple trades. Chaikin Analytics makes the process fast and efficient. So instead of getting bogged down, I was trading. A fast and efficient process. And he actually sent us his trading blotter. Now, we've covered how to profit from smarter option strategies, but to really take advantage of it, you've got to consider subscribing to Chaikin Analytics. These webinars are 85% educational and 15% persuasive. We want you to benefit from this by subscribing to Chaikin Analytics, which now includes OptionsPlay, Stock Screener, Earnings Alerts, and Intraday Charts. And then finally, news. Everything you need to be fully informed, all on one chart, one platform, with the benefit of having our alpha generating power gauge rating as your GPS during earnings season. So Chaikin Analytics has garnered a lot of street cred with very, very smart, long-established traders like John Carter and now Tom Gentile. Gain the edge needed for trading success. As a rule-based trader in both stocks and options, I rely on quantitative analysis to give me the edge I need. Chaikin delivers something that very few software tools do, the ability to have superb charting, but also Marc's proprietary algorithms. I highly recommend Chaikin Analytics to anyone looking to gain the edge needed for trading success. There again, directional edge, so key to making money in trading options. So Chaikin Analytics normally sells for $1,950 a year on an annual subscription. As a webinar special, we're reducing the price by $200 to $1,750. You can go to chaikinanalytics.com/options. Joe Bacella is typing that into the Q&A or the chat box, Joe? Well, check both the Q&A and the chat window. This offer expires Friday, October 21st. Now, along with everything you've seen, we give you a small group and one-on-one tutorials to help you get set up and learn all the features and the benefits of Chaikin Analytics and how to use them. You get John Schlitz's daily morning insights before the opening, so you don't have to stay glued to CNBC to find out what happened overseas or in the pre-market. And you get my weekly Market Insights newsletter, which talks about the direction of the market from my perspective, looks at strong and weak industry groups, and has a bullish or bearish stock of the week. Now, this week, we saw that it was Morgan Stanley. About 4 weeks ago, we featured Electronic Arts. It had just triggered an oversold buy signal. Power gauge was bullish, outperforming the market, strong money flow, 6 quarters in a row of positive earnings surprises, and a buy signal. That's your fat pitch. They report on November 1st, but this swing trade is over. The stock was below 80, and it traded up as we hoped it would and made a new high at 85. That took 12 days. That's a good swing trade. You buy a put vertical or a call option outright, and when it makes that new high, you take your profit on the overbought. Now, Chaikin Analytics is cheap at $17.50, but we really want to encourage you to take advantage of the power and the profit potential. We still got 3 weeks to go in earnings season. So as a webinar special, fast action bonus, if you subscribe by midnight tonight, we'll reduce the price to $1,650. And as an added bonus, the first 10 people who subscribe by midnight tonight will get a one-on-one telephone session with me after you've gotten onboarded by Joe Bicella and his team, so we can have a productive session that talks about your trading style, any questions you have about the markets heading into the election. Take advantage of this now, because you can be up and running and in one of Joe's onboarding sessions tomorrow. And I'm actually going to go to our fulfillment page. If you click on the link that Joe has typed into the chat box, look how easy it is to subscribe to Chaikin Analytics. The discount is pre-populated. Enter your credit card information, and you'll be up and running with Chaikin Analytics tomorrow. And Joe, why don't you tell them about your onboarding sessions, wrap up the webinar, and show them how easy it is to get up and running with Chaikin Analytics.
Awesome. So Mark, just as you mentioned, to join our onboard sessions, once we get you joined and subscribe to Chaikin, we're going to have you attend our 2 o'clock session. And don't forget that all of our webinars here at Chaikin Analytics are recorded. So we know that we have a variety of users, whether you're still working full-time or part-time, or maybe you're just busy at 2 o'clock. We record all of the webinars that we do host for our subscribers. So once we get you in here, again, you'll know how to create a list, how to run our screener, how to find the stocks that are really most relevant to your investment strategy, whether you're trading options or managing long-term positions. Again, we'll get all that covered during your onboard session. So be sure to take advantage of Marc's offer here. Again, $16.50 for a full year to Chaikin Analytics. That includes the OptionsPlay functionality, as well as access to all of our webinars, plus daily commentary from our chief market strategist, John Schlitz. So on behalf of Marc Chaikin, as well as Tony Zhang, we want to thank you all very much for coming out this evening. Keep an eye out for a recording tomorrow morning. In the meantime, again, Marc's offer is available to midnight tonight. So between now and then, have a great afternoon, and we will see you tomorrow for the onboard session.